It's Thursday, June 25. Here's what today's story could mean for the Korean market.
Right. There's a lot to unpack today.
There really is. So if you are looking at your screens right now, wondering what you position or cut today, I have three numbers before the open for you.
Okay, get me.
Number one, the KOSPI is sitting at 8,471, so up 3.26%.
Which is a solid jump.
Yeah. Number two, Samsung Electronics is up 9.84%. And number three, daily force liquidations are hitting 37.4 billion KRW, which is roughly 27 million USD.
Wow. I mean, those numbers really paint a fascinating, volatile picture of what's happening, like, right under the hood of the market.
Exactly. So today we're doing a rapid-fire deep dive into these dynamics using retorting from the Seoul Economic Daily.
Right. Our mission is basically to help you cut through the noise, right?
Yeah, to understand the massive structural forces from, institutional rebalancing to retail fragility that are basically about to collide in the next few sessions.
And we are already seeing that collision in real time, honestly. Like, just this month, pension funds net sold 2.3 trillion KRW, or roughly 1.6 billion USD, on the KOSPI.
Wow, that's heavy.
Yeah, and they are heavily targeting Samsung, driving 203.5 billion KRW in outflows from that stock alone.
Okay, wait, let's unpack this.
Yeah.
Because massive institutional dumping sounds, incredibly bearish at first glance.
Right.
But I'm looking at this like an unstoppable force meeting an immovable object.
How do you mean?
Well, Samsung has a non-discretionary 90 trillion KRW, so 64 billion USD buyback starting in July. Doesn't that structural demand just absorb all of this pension selling?
I mean, it does eventually, but the timing is everything here. You have to look at why the pension funds are selling so aggressively right now.
Oh, yeah.
The National Pension Service, or NPS, operates with strict equity allocation limits.
Okay.
Because the KOSPI surged recently, the value of their holdings blew past their target ceiling. So regulators granted them a temporary rebalancing waiver, allowing them to hold that excess equity without penalties.
Ah, okay, but that waiver expires on June 30.
Exactly. So it's not that they necessarily hate the stock. When that waiver drops, they are legally forced to trim their positions to get back under their ceiling.
Wow, meaning intense, purely mechanical selling pressure persists right up until June 30.
Yeah, it is a structural liquidity war.
Which actually brings us right back to that third number from the open.
The liquidations.
Yeah, the 37.4 billion KRW in daily force liquidations. I mean, a 74% jump in margin loan balances in just 1 year to 36.3 trillion KRW, or roughly 26 billion USD, is just staggering.
It really is. And the Financial Supervisory Service, the FSS, is extremely worried about this underlying retail fragility.
Are they doing anything about it?
Yeah, to combat it, they are actually mandating what they call pre-trade liquidation simulations.
Wait, what does that mean?
Basically, before a retail trader executes a highly leveraged buy, the broker's platform forces them to look at exactly what a forced sell-off would do to their account if the trade goes south.
Oh, wow. So it's a psychological speed bump.
Exactly, yeah. Showing you the worst-case scenario visually so you understand the very real risk of getting wiped out.
Here's where it gets really interesting, though. Because you take that retail fragility and you slam it into our next set of catalysts.
Right, the October disclosures.
Yeah, in October, we're going to see public disclosures of 170 low-PBR KOSPI names.
And just for a quick refresher, PBR is price-to-book ratio.
Right, meaning these are companies trading below 0.3 times the actual value of their assets. They're trading for less than their liquidation value.
Which regulators hate, because it signals a deeply inefficient market.
Exactly. And the urgency accelerates before October. Because starting July 1, tighter delisting enforcement kicks in for 9 specific dual-risk names sitting inside that low PBR group.
So companies that are not only deeply undervalued, but also, flagged for chronic financial risks.
To sum it up, Samsung's buyback creates a structural floor, but the NPS June 30 waiver expiry guarantees intense mechanical institutional selling in the immediate sessions ahead.
Meanwhile, any gap down open risks a cascading intraday volatility wave through mid-cap momentum names due to fragile margin levels driving those 37.4 billion KRW, roughly 27 million USD, in daily forced liquidations.
For active traders, the highest asymmetry lies in those 9 dual-risk, low-PBR names facing July's tightened delisting rules.
And that leaves you with one major question to mull over. With Nomura targeting 670,000 KRW for Samsung and institutional mechanics at war with structural buybacks, who wins the liquidity battle next week?
That's today's AI PRISM Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Eve award-winning series. We'll be back tomorrow.